What are the factors making this a very down and ferocious bear stock market? How entrenched and pervasive is this bear stock market? What subconscious factor could allow the bulls to reemerge? What stocks am I trading in this wild and woolly market? This is not financial nor professional advice. This video is for entertainment only. Hey everyone. First, I'm going to go over the inverse funds and the shorting I've been doing, which has been successful. And then later on in the video, I'm going to go over stocks that I'm finding that I'm more interested in on a long-term basis, because this bear market, believe it or not, will end eventually. Emblematic of the difficult time the stock market has been having is Apple and Tesla. Apple is struggling around 140, and Tesla was as low as 223. Wow. It was up at 310 not that long ago. It started with Tesla having problems with delivering less vehicles than they predicted that they would deliver. And then there's been this thing with Twitter. Is he buying Twitter or is he not? And that's been a constant source of debate. And we won't know until around the end of this, towards the end of this month, whether it's actually going through or not. But we should have known there would be problems with Twitter. It's like a little bird that tweeted to me that there might be problems with the situation. Mortgage rates keep going up. That's why I've redoubled my efforts on DRV, which is a triple leverage inverse fund on the real estate index. I think this has been a winner, and it's going to continue to be a winner as long as interest rates are going up. This is really an impressive bear market crash. So far, this bear market has wiped out over 36 trillion worth of stock value. I've noticed that this market is very affected by the yield on the 10-year bond. When the 10-year bond interest rate moves towards 3.5%, the market generally rejoices and goes up. And when the yield on the 10-year bond goes up towards 4%, the market generally crashes. And that interest rate going up, it also makes the US dollar stronger. That two-day rally on Monday and Tuesday, which was intense, that was caused partially by the interest rate getting weaker towards it was like 3.62%. And so the dollar got weaker, which is actually good for the stock market. And so that contributed to the rally. And in general, interest rates going down anyway will encourage the stock market anyway, which it's paradoxical, because when the stock market goes up a lot, that's just going to encourage the Fed to keep increasing interest rate at a very aggressive pace. It's been quite an eventful week. Monday morning, I got out of all my shorts. I'm pretty good at identifying when a wall is coming towards the shorts. And so I immediately got out of all of them and stayed out until Wednesday. I started trading in and out of the market. I think I must have traded at least 10 times on Wednesday. And I did okay on Wednesday. I did a little bit positive, starting to make up for some of the losses I took on Monday. On Thursday, I started gradually getting into DRV and to SQQQQ. It's SQQQ. I always want to overdo the Qs. But SQQQ is the 100 largest companies on the NASDAQs. And it's triple leverage on the inverse of the QQQ. So it makes it shorting the QQQ which is SQQQ, which is the triple leverage inverse fund on the 100 largest companies on the NASDAQ. So I was partially successful on Wednesday, and I kept a small amount in on Thursday, thinking that it could go up on Friday depending on the jobs report. And the jobs report came on Friday, and boy, did it deliver. The Fed wants employment to go down. In other words, it wants unemployment to increase. And it did the exact opposite of that. Unemployment was 3.7% the previous month, and the report on Friday came in at 3.5%, which to the Fed says, hey, we've got to raise interest rates more to create more unemployment, to use this horrific method to lower inflation. I'm also pretty good at identifying information that says go into it whole hog, and I bought a lot of shares of SQQQ. I bought like 10,000 shares, which did me quite well on Friday. So I nearly made up of all my losses. At my high point, I was at 544,000 ahead. And after Monday and Tuesday, I was down to like 450,000 ahead year to date. But my getting back into SQQQ and the end of the week action took me up to almost 500,000 again. I think it was like 496,000. So I'm quite pleased at how I came out of this. When you're doing short and inverse funds trading, you're always going to get whipsawed at certain points. But as long as the trend continues to be down, which I think it's going to be, and which I will continue to monitor, and I think is going to go into Monday. And frankly, Mondays are sort of famous for crashes, and so I will hold it. But I'm willing to jump out of it if it should go up and go against the direction that I think it's going, which I think is down. I'm now going to go into what stocks I've been buying on the bullish side. And it's kind of hard to do, to be shorting the market and then buying stocks that you believe will go higher. But this is the kind of market we have. OPEC, the Organization of Petroleum Exporting Countries, plus they call it, because they include Russia in it also. They announced that they're going to cut production, reduce production by 2 million barrels a day, which was sort of a surprise, and which has a major effect on the price of oil. Oil was in the 80s per $80 and some per barrel. But after this announcement of them cutting 2 million barrels per day, it vaulted into the 90s. And I bought both XLE, which is the oil sector, the energy sector of the S&P 500. And on Friday, I bought ERX, which is the double leverage bullish fund on the oil sector. And there, you can also triple leverage it. You would triple leverage it with an NRGU. I haven't triple leveraged it yet, simply because my experience with oil is that it's very variable. And when you leverage these things, you can make a lot of money, but you can also lose a lot of money. And I feel pretty confident with the double leverage, but I don't know if I want to triple leverage my best educated guess with oil, just because oil is so variable. But for those of you that are committed to and interested in this area, the triple leverage fund, bullish fund on oil would be NRGU. So NRGU takes 10 large oil companies and puts 10% into each of them. And the 10 companies are Chevron, ConocoPhillips, EOG Resources, ExxonMobil, Hess, Marathon, Occidental Petroleum, Phillips 66, Pioneer Natural Resources Company, and Valero Energy. And so you have 10 giants and you're triple leveraged on them. And it looks like a reasonably good bet. But right now, I would double leverage the oil sector on the S&P 500 through ERX. And maybe I will turn to NRGU in the future. And it's something that I'm watching for now. This is a dramatically histrionic market, you might say. And on Friday, after they announced that the unemployment rate had decreased from 3.7% to 3.5%, I immediately bought a lot of SQQQ. And I bought like 10,000 shares, and it went up from 55 is where I bought it, and it went over 59. So I made a nice tidy profit for the day, and I expect it to continue into Monday, but I will watch it like a hawk at this point because this market is so unpredictable. And that's why when I present these things to you, these are things that I'm doing, that I'm used to doing, that fit my situation. I don't know if it fits your situation. It may not. Every investor has or should have a certain strategy of what they're trying to do. And right now, I'm doing the inversion of funds, and which basically shorts a lot of things. But I'm also buying long-term stocks, and I've had some successes in that area. A stock that I'm invested in for the long term is Aher Test Systems. That's AEHR with the same stock symbol, AEHR. And they provide semiconductor equipment to semiconductor companies so that they can make the chips. It's test systems so they can test the chips. And this week it went from about $14 to over $17, which is over a 20% return in a week. And I look forward to future gains from this stock. Their price to earnings is 19, which isn't bad for a company that's growing as fast as they are, as they have a 42% earnings growth rate, which is excellent. So I'm hanging on to this one. A stock that I'm very high on is Pilbara Minerals, Pilbara Minerals. Its symbol is PILBF. And it's just been excellent. It's made 19% in the last 5 days, and its price right now is only $3.44. So it's a cheap stock, but you would never know it from its growth rate. Its growth rate is 54%. I mean, this is like Tesla in its heyday. And then its price to earnings is around 10. Pilbara Minerals is considered to be undervalued as its value is calculated to be about $4.35. Another lithium company I own is Sigma, SIGMA, Lithium, and its symbol is SGML. Sigma Lithium's price is around $28, and it's gone up 4% in the last 5 days. Sigma Lithium's price to earnings is only about 9, and it has an outstanding earnings growth rate of 39%. This is a keeper. You know, I think there's a large subconscious factor that could really bring out the bullishness in people and would factually influence stock prices to the positive. And that would be if the situation in Ukraine gets resolved. The Ukrainians have made major progress with the help of NATO and the United States in defending their country. And the Russians are retreating at this point. And it looks like Ukraine could very well be successful in driving the Russians out of their territory. And if that would happen, which I still anticipate will take some length of time, and it will depend what happens in Russia and how Putin reacts, which actually is kind of a point of the unknown. You don't know how Putin's going to react, how far he's willing to push this thing. Is he willing to retreat? All these things are questionable. It's also how much is Ukraine willing to negotiate? All these things will play in, and it may take some time to work out, but it's probably going to be worked out faster than we think. And this could be coinciding at some future date when the Fed thinks that things have slowed down enough because we're in a recession that they can begin lowering interest rates again. But if all that stuff would come together, you would have the bulls emerge and start buying at the bottom. It's already having some effect because things are going better than we thought it would go. And I think subconsciously there could be these hopes that things could turn out much better than we think they're going to. Right now, it's a background, it's subconscious factor, but I think it's something that we need to take into account. I was trading Yang, which is a triple leverage inverse fund on Chinese stocks that trade on the American exchanges. But for right now, I think I want to focus more on the crash that's happening in the United States. And also, I was trading the VIX related stocks, and I think a person could make money on the VIX related stocks. That's VIX, that's VIXY, VIXY. Another one was UVXY, and another one was UVIX, and they're all different levels of leverage on the VIX. But I see it kind of as a distraction. I rather deal with the stocks rather than dealing with a gauge of how stocks are likely to react. I would rather deal with the stock itself. And I think the money to be made is in SQQQ, the oil stocks, and in DRV, the real estate inverse stock, which is also triple leverage, like SQQQ is leveraged on the 100 largest companies on the NASDAQ. So that's the way I roll. This is my story. Thanks for listening and watching. Be sure to smash that like button and subscribe if you haven't done that already, and hit the notification bell so you're notified of future videos. And thank you very much.